What's up, guys? This is day 13 of BGW Bootcamp. And today's bootcamp, I'm going to be talking about liquidity part 3, and I'm going to be talking about inducement. In our liquidity part 1 and 2, we've talked about, structural liquidity, and we've talked about transactional liquidity. However, in this particular video, I'm going to be explaining what inducement is and also how to avoid inducement. So, as I explained that of structural liquidity and then transactional liquidity. So I said that structural liquidity tends to be the major stuff we look out for, whereby we have something like this. Say structural liquidity is whenever we have a sweep of the previous low, a break of structure, another low, another break of structure, and whenever this low is being taken out, then we buy from this zone and then take out this low right there, which is structural liquidity. And then the reversals inside here, the reversal inside these particular zones right here tend to be your transaction. This reversal you see right here is your transactional your transactional liquidity or whatnot right there. So without further ado, with that being said, today we're going to be talking about inducement, right? All right, I'm going to be talking about inducement, and inducement is, like I said, to make it simple, not to complicate things, is expansion. Whenever you see an expansion in the market, it tends to be inducement, or you can say is a trap that make traders to lose money, because that expansion, let's say you see your structural liquidity, you're very confident of yourself, this is a structural liquidity, but at the end of the day, price take it out and then before start buying or before start selling. So that's of price taking out your setup, your liquidity, giving it liquidity sweep, is called inducement. And for you to avoid it, you want to know where inducement happens. You want to look out for fake breakouts, fake breakout structures, fake structural liquidity, so that you can avoid it and then make money and instead of lose money to the market. So for instance, let's say we have something like this. You have um this right now, a break of structure, and then you have this market being going this way, right? Now, if there is no structural liquidity, or what is resting right here is inducement, you won't just say okay, because you know that whenever you see a first break of structure, a second break of structure, then price, we want to come to this zone, right? Price, we want to come to this zone right here and then continue. No, what will actually happen? Price will definitely take this out, then buy. So you want to now go ahead and wait for this to occur, the sweep to occur, before you are so buy. Now let's say you have your setup. Now if you have a setup like this, all you want to do is not take the trade, wait for a confirmation. That is how you tend to avoid the expansion and then make money off the market. I'm going to be showing you a chart example so that you won't be falling on this particular stuff and make money off inducements, right? And also show you how you can spot inducement. And you want to know that wherever there is no structural liquidity, whatever that is resting right here is inducement. And what is structural liquidity? Structural liquidity is whenever we have there's a sweep of the previous low, a first and break of structure, and then we tend to say that the second break of structure is what we tend to buy off, which is our B or minus structure, and then we'll make money. So however, if you don't see structural liquidity, then whatever resting right here are all inducement, right? So now you've understand that. Now let's talk about how you can avoid inducement. Now, to avoid inducement, you must wait for liquidity to be taken out first. Now, what does that mean? Now, if you have your structure and then there is no structural liquidity, for you to just enter the market, you urge not to enter the market. All you want to do is to wait for what liquidity to be taken out, is to wait for the other lows to be taken out, because all those other break of structure you're seeing are just fake break of structure, because one, there is no structural liquidity to validate that this is a clear setup for you. So if you say multiple buys, multiple sells, and there is no structural liquidity to validate it, all you want to do is for you to wait for what's liquidity to be taken out, which is to say for all those multiple B's to be taken out, then you start looking for what a buy or a sell. That way it will avoid you, or it give you a high chance for you not to trade on liquidity and then make money off the market, right? Now, so which is very important. So I'm going to write it right here so you can also read this and then go through it on your own personal time. All right, so another thing that you want to avoid in inducement is you use change of character or SOS, right? Use change of character as your confirmation. Like I said initially, if we have something like this, we have this right now, and then we see price going this way, right? Being bullish, right? Now, there is no structural liquidity. Now, how do we validate this? Is how do we avoid inducement? How do I avoid the expansion or the trap? So we want to wait for a change of character. Now, what is a change of character? Let's say price come this way and then do this, and then do this, and then do this, and then do this. Now you want to know that okay, character want to change. So the next thing you want to do now is to now start looking for your setup, because right now there is what an inducement, there is a what a sweep, or there is a structural liquidity which has been formed. And where is the structural liquidity? Now let me show you guys. Now since there's a structural liquidity that has been formed, where is the structural liquidity? The structural liquidity is right here, right? And which is the sweep of the previous high, and then the next one is right here, and then the next one is also right here, right? Which you can see the break of structure right here, and also this one break right here. Now what you'll be expecting is whenever that price now take out this one right now, whenever price now come into this zone, then you continue the trend and either take all this out right here. Is that easy? So this now will help you, instead of you rushing in to look for a buy setup because market is being bullish, then use change of character to avoid inducement, right? Because this expansion right now will not happen or call, then you just look for what a sweep of a previous high, and then the first break of social, second break of social, then you enter from this particular zone. Then you can either take out this low and then make money, or you can look out for all other lows right here. But easy not for you to like stay long in the market. You can just take out this low right here, and then you've made money, and then that can give maybe 1:3, 1:2, 1:5, depend on where price is coming from for you. And this is how you make money right here from the market. And guys, this is easy as ABCD. That makes sense. So instead of you now jumping into the market, you getting trapped and getting liquidated, then you wait for confirmation by using what SOS, shift of structure or change of character, to get this done. And I'm going to be making it, I don't know, I think on my, maybe on subsequently, I'm going to be explaining another more detailed video on change of character for you guys. And if it's something you want, don't worry, I'm going to make it for you after maybe I've done with the schedule plan of this bootcamp. I'm going to make a video on change of character so that you understand how change of character works. Because change of character is one of the major things that whether market is changing to buy or is going to sell, right? And if you understand if market is going to buy or sell, trust me, it will also avoid you from losing money in the market. That makes sense. So now you've understand that. Now let's go to the next tip on how you can avoid inducement for not losing money in the market. All right, another way you can avoid inducement, avoid the trap, is for you to trade after the manipulation, not during the manipulation. And this manipulation can be news, can be especially news. Right, I remember when the last FOMC Fed news that occurred, I had a sell setup on gold, which I'm going to show you the liquidity, and that's going to be the example right there. Now, you want to trade when the news is done and when there's no manipulation in the market, because that manipulation sometimes can be, can cost you, you know, inducement, unnecessary inducement, and unnecessary losses, right? And it's also a bad time in entering the first pullback, entering midway. So the good time is after the whole manipulation is done, then you can then look or enter the market and then place your trade. So you want to trade after the manipulation, not during the manipulation, especially when there is news, right? So you just don't want to trade on news. You are wait for when the news is done, then you look for if you look where the market, what happened, because most of the time price might take out your setup on news if it's a buy setup or if it's against the trend, to take it out before you even start selling. So you also want to like avoid trading during manipulation. Right, the next one right here is using higher time frame buyers is very important. Now, using higher time frame buyers is like, let's say, using the 1 day time frame, 4 hours time frame. Now, if you're using the 1 day and 4 hours time frame, you clearly see your structure very well. Now, that way you know where the market is going through and you know where the market is coming from. Now, if you know where the market is going to, then you will know, you now niche down to the lower time frame, like maybe 1 hour, 15 minutes or 5 minutes, and then look, follow the trend right there. That way you won't, be stopped out, because if you don't follow the higher time frame, then you want to go against the trend, and then what will happen, because the market is bullish, it will sweep your sell position, which you've seen a setup in a 15 minutes, and then market is being bullish in a 4 hours. Then what will happen, it will definitely sweep it off and then continue the buy. So for you to avoid it, you follow the trend, and then if you're seeing a sell setup in a 15 minutes while the market is being bullish, then you wait for a confirmation, which you wait for the change of character as confirmation. You wait for liquidity to be taken out first before you can then start selling or start buying or start knowing if the market will continue buying. So that way it will avoid you losing money and you avoid those trap from you. It's just that easy, guys. So now you understand using the higher time frame buyers. So now you've known that you need the higher time frame buyers to also avoid inducement. So this is going to be things you need to avoid inducement for you to lose money or for you not to lose money in the market. So right now I'm going to go ahead and show you a clear example of inducement, and then you can follow it right there and also start trading inducement for you not to lose money. And right, you want to know that if there is no structural liquidity, what is resting right there is inducement. But it's going to take everything out and then mitigate you and lose your money. So wait for structural liquidity and also wait for confirmation before you enter a trade, especially if it's a news trade or if the market is being very very volatile. So now let me go open a chart on XAUSD, because I've been trading XAUSD lately, and that's why I'm using it to show you guys an example. I had a setup right here, a sell setup on XAUSD, which turned out to be a kind of an inducement trade, and that is why I want to show you guys so you can also avoid it. All right, so basically I saw this setup. Now let me show you how inducements always occur. Now let's say we always know that before we to say we have a setup, that we must have a clear what in a sell position. We must have what, a sweep of the previous high, a break of structure, another low, that break of structure, and whenever price tap into this zone, do it, we'll sell down and take out this. Now what happened right here, you can clearly see that this turn out to be what, a sweep of this previous high that form what, this particular high you're seeing right here, right? And then what happened, we saw what, another what, a break of structure right here, right, that took out this high, right? And then we saw what, another stuff, what do we see, we saw what, another low right here. However, now you're seeing how this thing is playing out, and what did I see? I see what, another low right here. see another low right here. You can see the first break of structure, price came into the zone, and then even tap into this zone right here. If you should look, if I should put it at this zone, you can see that it has so tap into this zone. If I put it at this stuff right here, you can see that it has so tap exactly at the previous low, like exactly at the sweep of the previous low. That is where it tapped in, which is to say is an accurate setup, guys. Now you've seen that. The next thing that we are waiting is, now we want to wait for price to do what? To tap into this zone, then do what? We sell back maybe to this zone. Maybe I always sell to the next zone. Where's the next zone? The next zone is here. Boom. And now what happened? This setup took me like some hours before it triggered. So now the day that this setup trigger was the FOMC, the FOMC news that occurred on Monday, where the Fed tend to cut rates and all what's not. So that was the day this stuff happened. Now, this setup was validated, right? What do I mean by that? This setup was really validated, but because it was news, right? Because it was news and there was a lot of manipulation in the market. Now, immediately the market came down to this zone. Immediately we had the manipulation. You saw that the market travel all the way to this zone and then tap into my zone. And what happened? It started coming down. So I was like, okay, market will as well play. What happened? It now took out this. So this right here tend to be an inducement. So it tend to induce me right here. It tend to induce me right here. Immediately took out this right here. What happened? It now fall drastically to my TP, and this was so crazy. So if I had wait, maybe not enter a limit order, or I saw that the news is becoming so volatile, if I had wait after price has taken out this, seen the confirmation that is coming down, then I buy from this one and make this my TP, then I wouldn't have this unnecessary loss. That is how. So this is when your setup is accurate, but then you still lose money because you didn't wait for confirmation. Because after this trap, because this was a trap, price tend to take it out and then induce me. Now, if you want to make this maybe you want to make this maybe a high risk to reward, then you can do what? You can maybe come right here and then instead of making this your SL, your stop loss, you could just come right here and then make right here your SL. That way price will not tap into this zone, it will only come into this zone and then start coming down. But because this is good, and the higher your ISL, the more money you're going to be losing, right? So for me to not lose more money, I made my SL right here exactly at this zone, and what happened? Price took it out. If I had made it right here, price wouldn't have taken me out. So what happened? Price took out my SL from here. Immediately it took it out, then it starts selling, right? Which is to say, all you want to do to avoid this kind of inducement, you want to wait for confirmation. You want to wait for price to as well, liquidity to be taken out first, right? So this was the liquidity that was taken out first. So immediately the liquidity was taken out, as you can see, I can now buy either from any of this zone and then sell back to this zone. And this is what I missed last that was on Tuesday, which we had a FOMC, and then I saw this buy again, but I didn't enter the buy. I saw this buy, so immediately I saw this buy, I bought the buy to the zone actually, but I took profits, a very little profit right there. So for you to avoid all this right now, you must wait for liquidity to be taken out to avoid inducement. Like I told you guys, you must wait for what? Liquidity to be taken out first. Use change of character as your confirmation. Trade after the manipulation and not during the manipulation, and then use higher time frame. Now, good higher time frame has been bullish, but then I saw like my sell setup in a bullish trend. Now you're seeing yourself set up in a bullish trend, be it whatever pair. All you want to do is to wait for liquidity to be taken out first. If that's your setup we hold, if the setup hold and giving you that sell confirmation, then you can then enter the market, right? So that is how this work out. And guys, this can apply to whatever pair, and you can try it out. You can go ahead and check it out and then see what's going to happen. And that's going to be it for this particular topic on inducement. If you have any question right on inducement, you can go ahead and ask your question And also, so this video is sponsored by Bluffin, and there's also another exchange sponsoring this video, guys. Huge exchanges are sponsoring us, so you want to go ahead and also check out the links. Start trading with those guys because they're going to be giving you incentive because you set up an account. We have Bluffin, we have Pt3, and also have Weex, right? So these three exchanges now sponsoring our bootcamp. So most especially Weex is now sponsoring our bootcamp, and I'm going to be dropping the link in the description section of this video. And until I see you in my next video, keep winning, and don't forget to subscribe to the channel, share this bootcamp to your loved ones, and then like this video, comment what you think about this video, and whatever question you have in the comment section. I'm going to see you in the other side. Stay safe and peace out.